Welcome to All Things Policy, a daily podcast by the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like bringing fresh perspectives to Indian affairs and Indian perspectives to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hello and welcome to All Things Policy, your favorite daily public policy podcast from the Takshashila Institution. I'm Anushka Saxena, staff research analyst with the institution's Indo-Pacific Studies program, and I'm joined today by my colleague from the program, Amit Kumar. Welcome to the episode, Amit.
Thank you so much, Anushka. Glad to be here.
Lovely. So today, of all days, it's important to be discussing what we're about to be discussing, which is the Chinese economy, the Chinese plan, strategy, and thinking for the next 5 years on its social and economic development. And why today? It's because we are in the midst of a mega event in China, which is known as the Two Sessions. For our listeners and for a little bit of context, the Two Sessions is the annual convention of China's legislature and its consultative body. The legislature is called the National People's Congress, and the consultative body is called the Chinese People's Consultative Conference, or the CPPCC. And together, the convention of this NPC and the CPPCC is known as the Two Sessions. Now, if you're following the news, aside from everything that's happening in West Asia with Iran, Israel, and the US, for the Chinese in particular, the NPC marks a mega event, and the big ticket agenda item for this year's Two Sessions is, of course, the 15th five-year plan. As many of you would know, 2025 was the last year for the last five-year plan of Chinese to conclude, which was the 14th five-year plan. And now it is at the Two Sessions that the 15th FYP is about to be discussed, concluded, and eventually promulgated. Now, why the 15th FIP is important is because this is the long, approximately 150-page document that's going to guide a wide variety of stakeholders, bureaucrats, members of the Communist Party of China, local and provincial governments, state-owned enterprises, the private sector, even the bureaucrats, toward taking China into a new era of economic and social development. At least that's what the stated goal for the party state is. And it is the message that's been coming out of the Two Sessions, even though the conference itself concludes on 11th March. We already have a draft of the 15th FIP with us. And today, in my conversation with Amit, we're going to be deciphering 4 to 5 key themes in this document to give you a sense of what China's trajectory is going to tentatively look like in the next 5 years, and what is it that the party state aims to achieve in the next 5 years. So, without further ado, and this was generally the background and the lay of the land, let's get into the themes that we want to discuss in this conversation. Now, mind you, we will not be discussing everything in the document, but we hope to leave you with some important takeaways on the broad things that make or break not just the Chinese, but also the global economy. So when you're listening to this conversation, you should keep thinking about how this impacts the geography that you're based out of, the country that you're based out of, and of course, the general global economy as a whole. So Amit, let me start with a discussion on something that has been a priority for the Chinese party state, not just in the 15th five-year plan draft, but also in general in the past few years. We know for a fact that China is an investment-led, export-oriented economy, and it has very little when it comes to consumption domestically. And this is not to say that the numbers are less, but it is to say that for an economy of this scale and size, the amount of consumption that its own populace should be engaging in, that its own businesses should be engaging in, has remained at levels that are much lower than the global average. So 60% is the ideal percentage of consumption in the world, or the average, as it were. For the US as an economy, the number has been over and about 70%. But in China, domestic consumption stands at about 40%. And we know that global markets are becoming increasingly protectionist. They're becoming especially hostile to China because everyone's talking about de-risking these days. And many of them are trying to see it through industrial policy and dedicated measures such as export restrictions as well. So, Amit, without further ado, let me come to you with my first question. What is the deal with domestic consumption in China, and what does the party state, in your understanding of not just the 15th FYP but the general policy trajectory of Beijing, tell you about what it's going to do to stimulate consumption, or how important it is in their perspective to stimulate consumption? Over to you.
No, of course, it's quite an important issue for the Chinese Communist Party. It has been for the past about 10 years. They've been saying things like consumption has to take the driving seat when it comes to growth and national GDP. And that is what they have also identified in the draft recommendations report and in the draft FIP that was released just yesterday, that the consumption or domestic demand has to go on to become the main driver of the consumption. And of course, I mean, as I said, they have been saying that in this for the past 10 years or so. What was also outlined in the draft recommendations was that they would need consumption to see a notable increase in the share of GDP. So currently, as I said, it's at about 40%. They would like to see, I mean, they did not specify as to what that ballpark would be, the share of GDP would be, and the threshold that they would like to go and, have as a percent of GDP. But at least because of in the entire fallout that has happened and all the tensions it has driven in the global and in China's relations with the other major trading partners and economic partners. So somewhere around, if China can maintain and go about achieving consumption as a percent of GDP to about 50% is what they'll be looking like. But of course, there have been structural problems why China has not been able to do it. Even when you look at the draft recommendations and the draft that came yesterday, and these measures look like half-hearted measures. So they have talked about things like boosting employment and income. So that comes naturally to a growing economy. I mean, if and China has been growing for the past many years, and employment has been increasing, right? So this alone cannot be the uh, plan going forward, right? You need to do something substantially significant in order to change the structure, the underlying structure. So, what special are they going to be doing when it comes to boosting? Because employment every year, as per the Chinese data, it's increasing. Incomes are increasing. So, you need to do something significant. So, that is something which they do not dwell on, right? Then they have things like they use a proactive fiscal policy to, and they do not outline it as to how they will do it, but it's a broad statement that they've made that they'll use proactive fiscal policy and use fiscal and monetary policy in a way that will drive consumption. How they're going to do it, that's not quite clear. Yeah, what is clear is what they have come up with this plan to invest in people. Now, traditionally, the Chinese government has been very careful and very restrictive when it comes to using welfareism as a means to boost consumption. And this is something which economists worldwide have been recommending, that if China needs to make that transition and needs to boost consumption, and if it's serious, they need to go out and put money in the pockets of the people. Because let's say, because when you look at China's household incomes and its share in the national income, so yes, your GDP increasing, and with that your national income increasing, but that income is divided between the state, the enterprises, and the households. And we look at the households share of income in the larger national income kitty, it's been rising. There's been an year on year increase, but as a share of national income, it is not rising and has rather declined before, and now it has again come back to where it should be. But again, if you do a global comparison, household incomes as a percentage of larger national income in China is quite low, and about 5 to 7 8% behind the global average. And for consumption to actually go and rise, that household income has to outpace the global their GDP growth or the national income growth. Only in that scenario you will have enough, or you'll save enough to go and then consume. So that's a structural problem with the Chinese economy, and this is largely a result of the final repression and how interest rates are maintained. Then you don't have very tight social security measures, and that in fact then forces them to save more and consume less, because healthcare, education, etc. is quite expensive in China. Because, and that is also the case because largely local governments are the ones which are responsible for social security measures, but their policies are mostly directed towards benefiting the enterprises, because that's where they collect their taxes from. And therefore their policies are towards, or their expenditure is towards making things better for enterprises, rather than following people centric policies which can lower the burden on their income and then increase consumption. And we will talk about how this happens, but this is what the structural problem is. So the only, I mean, the one way to do resolve this problem would be welfareism, but there's an ideological inhibition, if I may say so, within the party circles, and especially Xi Jinping. And he's talked about this for quite some time now, that welfareism is something, and he often alludes to the example of Europe. I mean, it constrains your fiscal capacity, and there is a camp of economists within the Chinese Communist Party and within within the ecosystem, which feel that this is a last resort, and there's time has still not come to resort to these kind of measures. So welfareism is something, and because China also has to now compete on scientific and tech reliance, self-reliance. It has, I mean, there's a clear worry within the Chinese ecosystem and the Chinese leadership that this is something that they have to do on their own, and they will require the fiscal resources. So the question is, if you have limited fiscal resources, where do you spend it? Do you spend it on welfare, or do you spend it on things like emerging and strategic industries, helping the industries of future that the Chinese have identified, or in those technologies where you think are core technologies the Chinese love to say. So these are real contradictions that they face, and therefore this is reflected in the kind of measures they really, it seems like from the language, it really seems like they want to address the issue. But the problem is that they get into these kind of structural restraints that limits their capability, and therefore you see the list of measures. They're not substantive measures. One thing that they can do is bring out the tax reforms, and it's a low hanging fruit, just because at this point of time, how VAT is collected, and this is largely forwarded as one of the reasons why local governments are production centric. They seem to prefer production over consumption in their respective administration, and that is because VAT now is the largest source of income, tax income, for the local governments. And VAT is something that you collect on sales, after sales, and it is collected on the at the point of production. So the more number of enterprises that work in your jurisdiction or are operating in your jurisdiction, you have like a greater chance of collecting taxes through VAT. And because there is a lot of constraint and fiscal constraint that even the local governments are facing, especially after they cracked down on the property sector, which has brought the land sales revenue from land sales to a historic low in the past. I mean, they were rising, and there's a crash in that revenue source. So there's an incentive for them to prioritize enterprises and therefore production, and not consumption. So if you can reform, if the party can reform the VAT collections structure in a way where VAT is collected at the point of consumption and moves away or equitably distributed between the point of consumption and the point of production, which actually the draft recommendations does talk about. I mean, we'll see some substantial measures. So this is a low hanging fruit, from the tax structure, low hanging fruit, and also that would have a significant impact for the consumption. Rest of the measures that the Chinese party have outlined, except for I think investing in people, and if they, what they mean by investing in people is to introduce, in fact, welfareism by bringing down the education, parental care, education cost, healthcare cost, which they do allude to. I think those will again be something which will have a substantive impact.
Right. That's quite the lay of the land, Amit. Thank you so much. And it really does speak to the debate and the dilemma that is very much so structural and fundamental to the problems the Chinese economy is currently facing, right? So, clearly, from what you've outlined about the substantiveness of the measures or the lack thereof, and the real need at the same time to move to a consumption driven economy, because, as Xi Jinping likes to say, there are unprecedented developments in the world today, unprecedented and dangerous. It really does speak to how, the economy can be growing steadily at maybe somewhere between 4.5 to 5%, and yet deep within, when you scratch the surface, there are problems. And I think, and if I may say so, when you say substantive measures, what we're essentially discussing is that there is not a measure discussed or taken till now that can overnight, or maybe in the short term of maybe 6 months to a year, change the share of consumption as a percentage of GDP from 40% to 50%. These are measures that will make it really, really gradual, because healthcare costs won't come down immediately. The share of household income in total national income will not go up immediately. This will take time, and maybe generations would have to adjust to this reality of dual circulation and boosting consumption, because of how the Chinese economy has operated so far, which suppresses consumption domestically to be able to boost exports externally. And this would then also mean that production incentives might potentially go down. But again, all of this will happen gradually, perhaps, unlike the policy moves that were made to crack down on the property sector, which was almost immediate. So some of the bubbles are being burst immediately, but the alternatives that would solve the problems from the bursting of the bubble are gradual. And that really brings China at a very important crossroads today. And Amit, I want to pick on a lot of the points that you discussed just now. You talked about proactive fiscal policy, you talked about science and tech self-reliance, and I'm going to come to all of those. But before that, I want to focus on the other problem, which is, if I may say so, the other side of the same coin as low consumption, which is high external output, which, is the problem of overcapacity, because clearly, as you said, the markets are turning away. They're showing their back to the Chinese. And this is not to say that dependence in the world as a whole has gone down. And yet, again, maybe gradually, but perhaps in the next 5 years, you could see countries wanting to, or countries actively shifting to alternatives, because they're investing in it starting today. But 5 years seems less of a time for the Chinese to immediately transition to domestic markets more than international ones, right? So, what do you see in the 15th 5 year plan, or in at least the draft today, that speaks to the overcapacity problem and maybe even solving it from the party states perspective? Or do you think that they think it is a good problem to have?
No, of course, as I said, it's the other side of the coin. If you have low consumption, you'll have high investments in the economy, largely, and that's what happens in China. But if you have low consumption and high investments, the problem that you're going to encounter is overcapacity, or structural overcapacity, or industrial overcapacity, as people refer to it, right? So you have suppressed consumption, you have high investments. High investments lead to a lot of production, and that, because you have suppressed consumption, people are not consuming more. What it essentially becomes is, the difference is overproduction or industrial overcapacity. And this is something that has triggered a lot of tension between China and its major trading partners, because once you do not have the substantial domestic consumption to absorb the surplus industrial capacity that you are producing, what you will essentially do is export some of that overcapacity to the outside world. And that is something that has been happening for quite some time. And overcapacity is not something which is a new phenomena in the Chinese economy. China has been dealing with overcapacity for a long, long time, over than 2 decades. Earlier, it was steel, aluminium, then some other sectors, and now you largely see it in with respect to solar, with respect to EVs, and even batteries. So these are some new areas that have come and caught the attention of the world. But structural overcapacity in the Chinese economy is not something which is new. It has been a traditional issue. It is an old issue that countries were grappling with, and countries like India, because of dumping. I mean, when it's essentially dumping, right? When you dump it in the external market, I mean, countries had been dealing with it, but it's actually now the advanced economies that are facing the burnt of this, because China has really went ahead and captured high-tech exports, right, in manufacturing, and therefore this is something which has become greater issue, has got a lot of attention even among the advanced economies, and therefore you see a lot of back and forth, and Chinese go out and say that overcapacity is not something, there's demand in the global economy, we are trying to fill that demand. But yes, I think there has been a recognition on the part of the Chinese. I think 2024 for the first time they acknowledged. And see, if when you have overcapacity and people are not consuming, what essentially in your domestic economy, yes, you export some of that to the outside world, to the external market, but it also has a repercussion for your domestic economy, because what then starts to happen is the idea of involution, that where rat race and the race to the bottom, where every enterprise try to cut their prices because there's not enough demand, there's a lot of capacity, and they need to sell. And therefore, if you look at China's industrial profits the past 3 4 5 years, you'll see a declining trend where industrial profits have gone down, except for the last year. I think there was some positivity. It has not rebounded to the levels that the Chinese government would like, but industrial profits over the past 4 5 years have been declining, and that's a worrying sign. And therefore, you would also see that China has been battling with 11 consecutive quarters of deflation. Imagine the second largest economy in the world battling 11th straight consecutive quarters of deflation, and that's a worrying sign. That means your prices are not rising, right? There's no inflation in the economy. Uh, Acceptable. There's a inflation. You should have inflation in economy and acceptable levels of inflation. But China has, so the prices are not rising, and that's largely an indicative of that the prices, or there's a this thing of involution where the enterprises are cutting costs because they want to make sales and there's not enough demand. So these are all indicators of lack of demand and excess capacity. And for the very first time in 2023 2024, I think the leadership took uh, stock of the situation, and they said that involution is something that they want to crack down on. And then successively they have been identifying this as a problem, and they've said that this is something that we need to act upon, and that the Chinese market should demand a quality product, should have quality prices, and this race to the bottom is something that we need to crack down on. And there have been some positive news on that front. As I said, the last year there was some improvement in the industrial profits, still not to the extent that the Chinese leadership would want, but there have been some improvement. Now the Chinese argument here is, the Chinese leadership argument here is that this is largely a product of market fragmentation and local protectionism, because there's a lot of protectionism. Even if you again, the Chinese are not, I think, striking at the right solution when it comes to tackling involution. One way to do is that you dial back upon uh, investments, or make it the other way. So this is one. So obviously, when your economy transitions from investment-led economy to consumption-led economy, they would have an implication for both overcapacity and evolution as well, as the demand increases. But what the Chinese are saying, that what we need to do is, and if you look at the draft recommendations, what their idea is to solve this problem is that we need our investments needs to be more effective, and the rate of return on investment should be higher. So that could mean two things. Either, so there's an acknowledgement that there's a wastage, and therefore that is creating overcapacity. So you need to crack down on wastage, and for that, what they've outlined is that perhaps that acknowledgement among the within the central leadership, that the priorities are not getting communicated to the central priorities, that are not really getting communicated to the local governments, and there's some form of disagreement or a misunderstanding on the part of the local governments as to what the central priorities are. And if that is the case, they need to transmit those priorities quite clearly, right? So that is one. So effective investments, not increasing the rate of return, so cracking down on those sort of investments which do not create, which only creates capacity, but leads to wastage. That is one. The other way is because all the local governments rely on these sales for their revenue. There's a market fragmentation where you can sell, where you cannot sell, and every local government would try to protect their market. And there's market fragmentation and local protectionism. And the leadership believes that if you unify this market and you break down these market fragmentation, you resolve this market fragmentation and bring a unity in the national market, and therefore a lot of emphasis on unified national market. And this is their actual solution to tackling both involution and overcapacity. Their thing is, if they carry out these reforms wherein local protectionism is completely done away with, and you bring in market fragmentation, you unite the market in a way. So overcapacity in one region could be absorbed by uh, higher demand in some other region of the Chinese state, and therefore that's how you can balance and tackle at least overcapacity and involution at home. So this seems to be their plan going forward to tackle both these things.
Really interesting, Amit, because as you've absolutely hit the nail on the head, curbing wasteful investment alone will not be enough. It has to be that local governments that are outperforming others in production needs to be absorbed by the others that are perhaps not doing so well there. And I think the cycle here is really vicious and really evident, right? Because I would zoom out even more and say that the central government is actually communicating its priorities way too clearly, to the point where investment is concentrated in a few prioritized core sectors, and that is creating this ruinous competition where all local governments are wanting to incentivize production in certain sectors, which is why there is maybe no involution in tripod stands, but there is involution in electric vehicles and solar PVs, right?
Right.
And then this ruinous competition or race to the bottom, as you so eloquently put it, actually cuts down on profit margins and on innovation and R&D fiscal breathing room, right? Because the way companies in other economies perhaps would prove that their product is better, rather than just being the lowest priced, is by investing in R&D and having that profit margin that can be used to innovate and build something that there is a niche market space for, and then they become the preferred alternative, or a group of companies become the preferred alternative, even in that EV space or even in that battery space. But because the economy as a whole is wired towards cutting costs and reducing the price of the products, there is no profit to innovate. Innovation is not even something that the SOEs are perhaps thinking about as much as they are about cutting down on their margins. And then, of course, because the priorities are so clear, state guidance funds are so clearly, or government guidance funds, pardon me, are telling you so clearly that these are the few areas that we want production to go up in. There is eventually ruinous competition, right? So I think the national unified market, sure, absolutely a very important solution to some of this, but also reprioritization and maybe even deprioritization of
Right.
certain domains from the central government is seems vital at this juncture. And Amit, with that, I think I'm going to come to you with my final question, which pertains to sections that are really, really important from my perspective in the FIP, but I'd love to hear your thoughts on this. These are the sections on science and technological self-reliance and the creation of a modern industrial system. Now, I'm not sure if these go hand in hand, but at the outset, it seems like they do, because ultimately, I think a lot of this or maybe equally in parts, it pertains to the domestic economy, but also to great power competition, to being able to be at the frontier of what you yourself mentioned as being emerging in strategic industries as well as core technologies, right? And now for the past few years, not just in the 15th FYP, the Chinese are saying that the West has placed a stranglehold on its S&T development for reasons which we can discuss in other podcasts. But for this reason, China has to do all of this on its own, right? And it can't possibly, but I guess that is the world we are entering into, right? A world which is not underpinned by comparative advantage based trade, but rather by protectionism and self-reliance, especially in science and technology, right? So, and of course, the quote unquote modern industrial system. So, what do these things mean to you, Amit? And what do you see the Chinese strategy being in these domains?
No, of course, as you said, both scientific and technological self-reliance and modern industrial system go hand in hand. They're the two sides of the same objective that the Chinese want to achieve. So when it comes to core technologies, there is a need for self-reliance. That and they have identified some of the core technologies like IC, biomanufacturing, uh, AI, human interface, things like that. Some core technologies, software, some of the softwares, etc. So these are some of the core technologies the Chinese have identified, and they would like to see that there's a complete self-reliance on these areas. They do not need to depend. Now, a component of that is that you do research, you do basic innovation, breakthrough research on these areas. But at the same time, and this is something which I find very interesting in the document, that there's a consistent emphasis by the leadership that any technology or innovation that you come up with, they should be quickly commercialized and find applications. So the sense is that you do not do research. I mean, of course, you can do all sorts of research and breakthrough and frontier technology research, but the Chinese leadership is what the Chinese leadership is actually interested in. That you find and do innovation in areas that can be quickly scaled and find applications, so that you can capitalize, and they can self-sustain themselves, and you do not require state capital to fund them. So that's the kind of, and you can create a market for it, because only then you will create dependency. So that's one component of it. But yeah, coming back to the scientific and technological reliance, this is what the Chinese say, that they were very clear that there are certain core technologies, and we want to be self-reliant, do not want to be dependent on. And the way to go about is that increase their R&D expenditure. I mean, if you look at total research expenditure, and you compare China's expenditure with the American expenditure, China is not behind by far. China already invests about $780 billion annually in research, whereas the figures for the US is about $820 billion, and China has caught up actually. From in 2000, it was about China was investing about $100 billion, and from there it has come to this figure, and that's quite remarkable. And I think China will continue to double down on this measure. Now, coming on to the modern industrial system. So you can't have self-reliance or sufficiency in core technologies unless you also have an industrial system to back that up, and you need to produce it yourself. Research is one thing, but then you have to produce it at home, right? But what the modern industrial system also requires China, so now it adds two more things in addition to being reliant on certain core technologies. What it also does is that it identifies two class of industries. One, the Chinese call it strategic and emerging sectors or industries, and EV used to be one of the industries of strategic and emerging. Until now, it has been taken out, because now the Chinese actually feel that EV industry is something which does not require that kind of support from uh, the government, and that they're self-sustaining, and they're doing quite good globally, and they're largely self-sustainable. So there are new areas that they have identified as emerging and strategic sectors, and they what the leadership says is, wherever uh, the Chinese companies or enterprises are leading in these emerging sectors, they should maintain their lead, and wherever they're playing catch up role, they should try and bridge that gap and quickly get to the frontier in these technologies. What they also do is, the second class of industry that they talk about is, and this is critical to their modern industrialized system, is industries of future. And there's again some of the things that they have identified, that these are industries of future, and they're also, they want to move in before than everybody else, and have a first mover advantage, because those will be industries that will become uh, potential industries that will emerge going in the future. Necessarily not might be the case at this point of time, but going forward there'll definitely be industries of future, and therefore China wants to have a presence in there. Now, we have always been talking about comparing the two systems, whether the West can do it or the Chinese can do it alone. West has a lot of other advantages. It can distribute costs, talent, etc., network. China has to do it all alone, but there are certainly a lot of strength that the Chinese system brings. And quickly, if I can just list those out for you. One is the political oversight, and this, because a lot of these decisions are taken at the top level. Yes, there are consultations from within and from below, but a lot of these deliberations happen at the topmost level. Now these priorities are then communicated to the lower level, and there's a political oversight that is maintained through the promotion structure, through creation of parallel governance structure by appointment of your party secretaries at each level of uh, governance, right? So this ensures that the central guideline, once you have national priorities that has been outlined by the central leadership, it is followed to the toe by the provincial levels of the government, the townships, the prefecture level municipalities, etc., and everybody has to follow and align their policies, has to align to these uh, priorities, right? Then they back this up with fiscal oversight, and the fiscal tightening really leaves no room for these local governments, for all forms of all levels of local governments, to deviate from national priorities, because they're so dependent on transfers and fiscal resources from the center, that they'll only get those when they align their priorities with the central guidelines, right? And then the banking system and the financial institution system is also structured in a way that you get easy loans for your projects when it aligns with the central priorities. So the whole system that, from top to bottom, how it percolates these central priorities. Then you also have the economic structure that is a strength for the Chinese. I mean, the investable pool of capital that the Chinese have is quite large and unmatched if you compare it to the other countries. If you see, and we already talked about this, right? China is an investment-led economy and therefore has a lot of capital to invest into. If you China's investment alone is comparable to the levels of what US and Japan together, or US or Germany together, would invest in their respective economies, right? So that's the and in Chinese economy cumulative to the, if you compare with the cumulative economy of these two other two economies, it's way too less, right? And yet China invests a lot more, or a comparable number, in the economy. So that's another thing. The other thing that comes into, and I think we is less talked about, is the workforce, manufacturing workforce that the Chinese have. And if you look at it, China continues to be the largest, it harbors the largest manufacturing workforce in the world. Back in 2000, at the turn of the century, China boasted about 110 million people in the manufacturing workforce, in the manufacturing sector. So that was the case. And even today, the country with the second largest manufacturing workforce is India. And even today, it only harbors or boasts about half of what China boasted back in 2000. So that's massive. And even today, if you look at the numbers, Chinese numbers, these are about 104 million people still are employed in the manufacturing sector. So sustaining that 100 million plus people in the manufacturing sector for about over a quarter of a century has meant that there's a lot of diffusion and acquisition of talent across the sectors within the manufacturing sector. And what this also means that these skills are easily transferable and redeployable across sectors. And therefore, if you look at what this means, is that example, the case study of Apple versus Xiaomi is quite instructive here. They're both major global smartphone companies. They both wanted to venture into the EV segment, wanted to have a segment where they could produce electric vehicles. Apple tried, and one of the largest, leading innovator in when it comes to high tech, right? And yet failed in this, but Xiaomi is the game. And this was largely, there were other reasons as well, but largely possible because the industrial system of China allows them to, tap onto the talent that is available, and they could get the talent, get the skills, and also the fact that the wages are low, and there's an ecosystem within China. It was easier to build that system from scratch for Xiaomi in China than it was for Apple to do it in US. So if you want to do something at scale and quickly build something from scratch, China is the place to go because of all these advantages. So I think China will give a tough competition for others, for the West and the rest. What will this competition, or whether they can mount a challenge on China, will hinge on their ability to, weave coalitions and distribute costs among themselves.
Lovely. Thank you so much for that, Amit. That's quite the conclusion and the explanation. I think, yes, scale, manufacturing capability, manufacturing, industrial technology, all of these are things that are oft discussed in the Chinese context. And yet, the power of the workforce, their ability to also use the same industrial technological infrastructure across sectors within the manufacturing domain is equally vital. And perhaps this is why for the Chinese in particular to achieve science and tech self-reliance, it isn't as important to be able to think about how to enhance maybe the quality of the manufacturing space and the workforce, but the quality and even the quantity of R&D, applicability of R&D and basic and advanced research, right? And maybe that is why the K visa to augmented for and targeted more towards global high tech talent or young STEM talent willing to build things and willing to research on things than perhaps willing to manufacture high tech or core tech goods and services, right? So thank you so very much for that, Amit. This personally for me has been a really insightful talk. And of course, as we await the final conclusion of the two sessions and await to see the final draft of the 15th 5-year plan, I think for all of us, this conversation would have had certain takeaways as to what to expect from China in the next 5 years and where Xi Jinping's head is at when it comes to socio-economic development. So thank you so much again, Amit, and thank you also to our listeners for tuning into this episode of All Things Policy.
Thank you so much, Anushka.
If you liked our show, dive into Takshashila's research on technology, strategy, and economic affairs. Check us out at our Twitter handle @TakshashilaINST or our website takshashila.org.in.